Hi, I'm Alex, welcome to the channel and thanks for tuning in. So firstly, Happy New Year, and I hope everyone had a good break over the festive period. This is the first video on the channel this year and it's good to be back and have some really exciting stuff planned for this year. In today's video we're talking about HITI again, and specifically two things. Firstly, its recent acquisition of Fastendr and why this is an incredibly exciting development, but also its recent announcement regarding its progress with the discount club model and its new store opening. Now, it's been a little frustrating watching the stock price perform as it has over the past couple of months, with the stock price so clearly not reflective of the company's strong performance, but long-term investors needn't be worried, and indeed perhaps this period of decreased focus is in fact a good thing for HITI. Personally, I'm really excited by the recent news. I think the acquisition of tech capabilities, especially the valuation they've got this for, is great news, and really it's the first step of becoming that Amazon of weed, or certainly the most differentiated full-service offering for the sector. Anyway, we will cover this in loads more detail in this video, but before we get into it, please smash the like button. We don't do clickbait on this channel, so the algorithm seldom shares our videos. It's massively appreciated when you do, and it really helps support the channel. If you're new to the channel, make sure you're subscribed and check out the Patreon for the private Discord and other investing content. As always, I'm not a financial advisor. This video is purely for educational and entertainment purposes only, but let's get straight into it. So, on one of the first working days of 2022, Raj, the HITI CEO, announced the company's acquisition of Fastendr, a cannabis-focused technology platform, and the one single budroom store where the technology is currently being implemented and is operational. In really simple terms, Fastendr is a software and technology platform which enables efficient processing of customer orders, greater collection of customer data and insights, and the operation of smart lockers to help fulfill orders. Now, whilst this is exciting, what is most important is how this technology can be integrated into HITI and how it can help drive a stronger financial profile. Any company can buy loads of tech solutions to appear a more tech-enabled model, but the key is to ensuring that the technology can actually be harnessed and adopted by the company to drive that stronger financial profile, whether that be more sales, higher margins, whatever that may be. That integration is essential. In my opinion, and on the basis of my analysis on this deal, I certainly think that this is the case for Fastendr and HITI. Currently, Fastendr is being used by one store, Budroom, and for a single site brick and mortar retail business, it's generating EBITDA margins of around 21%. You have to remember that this margin is after many costs which already exist within the HITI group and are duplicative and will be eliminated upon consolidation, for example finance teams, marketing teams and other general overheads. When this is incorporated into the HITI business, you can expect to see a much higher margin and much closer to those of an e-commerce model rather than a single site brick and mortar retailer. Now, more importantly though, this technology is going to be rolled out in two ways. Firstly, across the HITI portfolios of stores, which will provide significant upside in margin for the overall business. It will increase the operational efficiency and will drive up both greater average revenue per customer, but also drive down the cost to serve those, both being positive for the margin of HITI overall. This is also important in offsetting some of the decreased margins that we've seen from the adoption of the discount model. Through this acquisition and this strategy, HITI will once again be able to command superior margins versus its competitors, and this is really important. However, the second part of this growth strategy here is through selling this software as a software license to its competitors. Now, this is really smart. Some people may initially think that this is crazy to enable competitors to operate at higher margins, but this is genius here. Firstly, they'll be licensed this at a cost, which will be included in the competitor's cost base, but not in HITI's, so HITI's will still remain higher. And secondly, there's no additional cost for HITI to selling that service and that tech to competitors. So in effect, each dollar of incremental revenue generated from this flows all the way down to bottom line and to profitability. Again, this drives much higher margins. In addition to this, you then have a software that is across the industry and which all players are reliant on, and the benefits this has for the rapidly growing data and analytics business is enormous. Having full sector coverage massively increases the value of the information and data from that business, which in turn helps HITI drive greater profitability again. As always with the deals which HITI does, this is massively accretive for shareholder value through multiple arbitrage. They're paying 3.6 million Canadian dollars for a business which is generating 500,000 Canadian dollars of EBITDA. This translates to an acquisition multiple of around 7.2 times EBITDA. HITI is trading at significantly above this on an LTM basis, and so again, massive value is being created for shareholders through multiple arbitrage here. Again, the market won't get this on day one and won't be given credit for that valuation, but that's fine. We are patient investors and it will take some time, but in the longer term, this will be massively accretive for the company and for long-term shareholder value growth. Also, while we're at it, it's worth mentioning that finding a tech business and acquiring it for 7.2 times EBITDA is clearly phenomenal. Whilst the poor sector sentiment for cannabis is frustrating for the high tide stock price, it does mean that the company is able to acquire companies like this at very low valuations. If this was in any other sector, say a consumer electrics or groceries facing tech business, it would be a 7 times revenue multiple deal, not an EBITDA multiple deal. Let that sink in for a moment. If HITI can continue to capitalise on this opportunity, then all long-term investors should be very happy indeed. Also, a quick shout out to Raj and his team on the timing of this too. An enormous amount of work goes into pulling deals like this together, doing the DD, structuring the transaction and then ultimately closing it. This is clearly something which a massive amount of work went into over the Christmas and New Year period, so it's a real testament to their work ethic, their focus and their energy. Management teams with this hunger and ambition are rare, and so this is again fantastic to see. Now the next thing to quickly touch on is the update released by HITI on the opening of their newest store in Hamilton, Ontario. Now this is the company's 106th store, and again is another example of how their scale enables them to secure premium real estate which competitors are unable to. This is a great sign to see and is a validation of our investment thesis which we discussed many months ago. As part of this news release, HITI also announced significant growth over the past 3 months of its club membership programme. As of early January, there was nearly 360,000 members in this programme, which is a 47% growth over the last 3 months. This is a really strong sign that the transition to the discount model is working well and is being perceived well by customers. I would expect to see this translate into strong revenues and strong growth in market share, both of which are really important. And personally, I'm really excited to see the update in the results published later in January. Anyway, that's it for this video. I hope you enjoyed it. If you did, then please smash the like button. If you're new to the channel, make sure you're subscribed. And if you want to see more content, then check out the Patreon. As always, please let me know your thoughts and comments in the comment section below. I find it so interesting to hear all the different opinions and perspectives, so please get involved. Thanks again for watching, and I'll see you in another video.